90% of beginners make the same investing mistake, and it keeps them poor for decades. I'm going to show you exactly what it is and how to fix it starting today. In 2008, millions of Americans lost everything in the stock market crash. But here's what nobody tells you. Most of them didn't lose money because the market crashed. They lost money because of one specific mistake they made before the crash. The same mistake beginners are making right now, in 2026. Mistake number 1. Investing emotionally, not logically. When markets go up, beginners buy because everyone else is buying. When markets crash, they sell because everyone else is selling. This is called following the herd. And it destroys wealth. Smart investors do the exact opposite. They buy when prices are low. They sell when prices are high. Warren Buffett's most famous rule: be fearful when others are greedy, and greedy when others are fearful. He's worth $130 billion. The rule works. Mistake number 2, trying to time the market. Every beginner thinks they can predict when the market will go up or down. They wait for the perfect moment. But here's the real secret. Even the smartest investors in the world cannot time the market consistently. Not Goldman Sachs, not BlackRock, not hedge funds. What actually works? Timing the market, not timing the market. A $10,000 investment in the S&P 500 in 2000 would be worth over $70,000 today, even through 2 massive crashes. The market always recovers, always. Mistake number 3, waiting to start. Most beginners think they need thousands of dollars. That's wrong. You can start with $1 today. The real cost isn't the money you need. It's the time you lose by waiting. Compound interest is the most powerful force in finance. $100 per month at 10% return over 30 years becomes $226,000, but only if you start now. Every year you wait costs you tens of thousands of dollars. Here's exactly what to do instead. Step 1. Start today. Even $50 per month makes a massive difference. Step 2. Invest in index funds. Low cost, diversified, proven to outperform most professional investors. Step 3. Never sell during a crash. Crashes are sales. Buy more. Step 4. Stay consistent. Same amount every month, no matter what. This is called dollar cost averaging. It removes emotion. It builds wealth. The biggest investing secret is not which stock to pick. It's having a system and sticking to it. Follow Future Finance Lab for more. I share one investing lesson every single day.